Hello, hello, hello. Let's get the microphone test out of the way here. Let me know if you can hear me across the various chats, and we're going to get started here in about a minute. All right, let's get the music under control here. And we're going to get started. All right, let's roll right into it. Hello and welcome to Macro Mondays here on Landy's Crypto Corner, where we take a look at the longer term timeframes and weave that into our daily analysis and some lower term timeframe analysis as well. For Bitcoin specifically, and we'll also take a look at Dixie, gold, and traditional markets today. It's going to be a little bit of a shorter stream today, as I do have a sick child at home. So you'll have to forgive me for not hanging out and chatting, doing a typical Landy rant near the end, and or any TA requests today. My apologies for that. But let's go ahead and jump right into Bitcoin. Well, it seems like Bitcoin is trading right around where it was when we last spoke. So you all have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. And with all of that being said, never mind. No, I'm just kidding. All right. It is still trading right around that upper first standard deviation of the Bollinger Bands here. And oh boy, I hope I'm not getting sick too. Bitcoin's trading, above the daily basis band, below the upper first standard deviation. And when looking at support and resistance, we can see that it's just in the weekly here. Oh, uh-oh. There we go. Let's make sure I didn't mess that up too bad. There we go. All right. So if we go over to, let's try this again, the support and resistance chart, we can see the Bitcoin is just, kind of trapping around the weekly with price. Basis band still coming in at that weekly at 41.8, almost 41.9. Bitcoin is, kind of playing around that upper first standard deviation and kind of testing this weekly overhead in the 43, 2 to 5 area where the wick highs are. So I think prior to market open today, we saw that spike up at around 43.5 again. Kind of run these highs. If we don't see Bitcoin take the highs out around that 43, 8 to 9 area, almost 44K, it's probably going to head down. But as long as it's inside this weekly, we're going to see Bitcoin's BBWP metric cool down. We can see that the bands are set up within a range here around this weekly. So to the upside, upper second standard deviation is right there in the low $44,000 region, currently coming in at 44.2. The lower second is down here by the lows around 39.5. So the upper second and lower second are going to be the main areas to look for aggressive expansion. Closes above the upper second or below the lower second, likely going to lead to tests into, for instance, above the upper second up to this monthly at around 45.5. Now, we do need to consider the horizontal support and resistance, but because the daily closes are underneath this upper second standard deviation, if we did see a closure above there, then, we'd target the next close open here at around that $45,000 to the monthly at 45.5. Of course, above there, 47,000, 47,840, and 48,240, and then the wick high at 49K. Of course, if Bitcoin were to head down to that lower second standard deviation, start getting below this low, we would be looking for initial expansion right into this weekly at 39 to 38.5. Of course, if things did break down from there, there's the weekly at 37.7 to 36.2 down below. Now, we can get a little bit of an edge as to direction if Bitcoin can get above this upper first. That is currently coming in at the top side of this weekly here, where we have that price pivot around 43.1 to 43.2 to 3. If Bitcoin basically starts closing above the weekly, that's where we're looking for the highs to get ran again, possibly push that upper second standard deviation at 44K, and then we could start looking to the other areas of resistance overhead. And to the downside below the basis band, specifically here around 41.8 to 41.9. If we start to see Bitcoin closing dailies below there, then that would make available the lower first. Now, this is cutting across the actual lows of the tighter portion of this range prior to the deviation on the high and low. That's coming in at 40,700 or so. So below there, then we're looking to the actual low deviation getting ran and possibly back into that weekly monthly zone. As it stands right now, it's kind of boring. Bitcoin's just kind of going sideways. If we were to head back to the clean chart that we use for the streams here, in the lower term time frames like the 4 hour, we are just seeing a consolidation with slight expansion now after a spike into the upper second, upper third zone here, and a pretty nasty rejection in that area around the highs of this range. And then didn't quite sweep this high, but it did sweep this lower high area. And now it is kind of hanging out right by the lower second standard deviation. Pretty low BBWP, along with the contraction in the Bollinger Bands. If we were to start seeing this really get aggressive expansion, closes below the lower second at 42.5 that take out this close open, which is right there at 42.5 anyway. Then we're looking back to the railroad spike pins here, the lows at 42.2 to this low side consolidation structure around 42 to 41.8 or so. So again, right around that weekly. Now, I will say that it's kind of pivoted right in this area that it's trading in at 42.5. To be fair, it is. It's trading right at 42.550 or so. 42.500 is the momentum pivot. That would only be an initial cross to the downside, though, if we did see Bitcoin begin to turn. So, I would be aware that if it starts to break down below that lower second, it's going to hit that pivot to the downside, turn stoke down. And realistically, just keep an eye on the weekly area down below at the 41.8 area. If that area is dropped, then we're probably looking for a drawdown into the mid to upper $40,000 region, at least initially, and then we come back to it later for continuation and or a bounce. But as it stands right now, it's not too crazy. It's not too bad. When looking at the daily here, we can see that momentum has turned on the daily. 42.8 is the momentum pivot. So, Bitcoin's right within range. You can very easily trade above it today and close above it, keep momentum or turn momentum rather back to the upside in the overbought zone here. I don't really have too much to give you on that part because it's really setting up for a range here on the Bollinger Bands. That upper second, lower second being the primary areas to pay attention to. And it's basically 44.2 to 39.5. And, those areas get broken. Bitcoin's going to, head down and test resistance if it gets broken to the downside, which, to be fair, you can get in ahead if you start seeing things fall apart and we start to see things turn on the daily. But even then, I would be wary of taking counter trend trades or in trend trades around that support. And same goes for the upside until we start seeing some substantial volume that's breaking through these areas. or low volume that breaks through a high volume area. That would be another thing to watch out for. 12-hour getting some nice compression here. This is what I would like to see on the daily, but this will give us a little bit of a heads up for what's going to happen on the daily. If we start seeing closures above the upper second here, which is within the local consolidation range on the 12-hour, coming in at 43,675, so basically 43.7, right around the highs. We start to see 12-hour closures above there. We're going to get expansion of the Bollinger Bands along with BBWP expansion. If we do start to see the local range lows dropped around the lower second standard deviation at 41,750 to 41.8, then we're looking for expansion at minimum down to where the lower third is, at 41.2 to $41,000. Below there, we're looking for the actual low deviation to get tagged. At least the high side of the consolidation down here a little bit further, in the mid $40,000 range at minimum. I would expect continuation down to test the lows, but that's not my first take on it. 43,150 is going to be the momentum pivot for the 12-hour. 8-hour, we're looking at just a range. 43,000 is going to be the pivot there. It's a little bit lower, 42,930, but basically $43,000. You will see that momentum pivot turn back up. In this case, if Bitcoin starts to drop the lows here at 42,281, basically the weekly there is what we're going to be targeting, somewhere around that 41.8, and then assess from there, which is right around the low side wicks here. So above the upper second here at 43.5, we're looking for expansion to the upside. Very low volatility even. Nothing too crazy going on here. Just a compression. The expansion will tell you, as long as it breaks the range on expansion, it's going to tell you the general direction, especially if it is to the downside, mainly because the daily would follow and increase in its pressure down. We do see a little bit of expansion of volatility within the bands here, but we see a pretty tight compression on the 6-hour. Upper second is right at that wick high, 43.5. Lower second is right at those wick lows at 42.2. So again, pretty easy to see the areas of interest, and if they do begin to break down on expansion, then I would expect the move to get rolling, at least within this within the context of the price action that we've been seeing over the past month or so. Now 43K is also the 6-hour pivot here. 4-hour is going to be, let's see what that's pivoted at, 42.5, right? Yeah, we looked at that. Yep. All right, so I'd be a little wary of this until I see it actually break down below that 42.2 on the 4-hour here, because it is right up against that lower second. If it does start to expand into it, there is, when I put my cursor over here, you could see that, well, let's go ahead and just snap a horizontal down so you can see. There is support. So if this area is lost, you can see, if we were to zoom this in a bit, and we'll just grab another arrow, where this pinned out was right at the initial high from the deviation lows. So we saw the consolidation over here. We saw this area kind of break down on 2 big candles without breaking the wick low. Comes back down. We saw this high get ran right after the deviation down to 38.5 at the monthly. And then a little bit of a pit stop at the upper first there, move through basis, and then goes on to make the highs there around the deeper $43,000 region. And that's the area that was just spiked again. But we do have a bit of a zone, so I would be aware of that zone, where this wick is kind of encompassing this consolidation prior to the drop down, and this higher low structure on this particular move up to where price is trading now. So I would keep an eye on this zone at about 41,444, 41,450 or so, to around that 42.2 to 42.3 area, at least to the downside. Of course, when looking at what's coming up on the top side here, pretty easy to see that that where this is rejecting is right around this consolidation, and it's kind of stayed below the closes here, and that's going to be the big area to watch to the upside. Is this basically this close right here? It kind of cuts across the highs. You can see how it was support, resistance, support over here, consolidation, drop through, retest and fail, retest and fail, and then even on a couple candles it just closed up. It was a close open right on them around that 43 and a half, and I believe there's a major time frame closure there as well. So to the upside, if you're just doing kind of a support and resistance zone look on things, you're looking at 43.5 to 43.9, almost 44k there. To the downside, I would keep an eye on that 42.2 to 41,500 or so. And just be aware that you can tighten up that criteria a little bit more based on some of the momentum reads as they update across the various time frames. So it's going to be a long week if this does head down. By the way, you're going to see a lot of tears all over the space. I will tell you again, when looking at that monthly that we had already talked about, when we talked about this on Friday with the monthly close, we talked about the upper second being closed above, getting that more aggressive angle on the upper standard deviations, and the upper first is typically what gets run after running the first bear market lower high on a close. Then we typically are looking back to the upper first. For those of you that might be new here, I know for those of you that have been here, I show it just about every time, but there is new people here, so just bear with me for just a minute because this is very, very important. Something I pointed out to Credible Crypto that I know that he found interesting. I believe there was, I believe Rickus is another longer term time frame guy that was there. But you can see bear market lower high on a close occurred in 2014. So the first bear market lower high was swung on the way up. So we saw expansion of the Bollinger Bands, or price volatility expansion with it. And we saw the swing of the bear market lower high from 14. What did it do? Comes back down to the upper first, wicks through it a bit here, and then goes on to new all-time highs. Same thing in 2019. Very simple. We've got the first closing bear market lower high. Yes, there was lower highs. Those are swings, though. But the first bear market closing lower high, which came in on September 2019, after putting in the high here in June, well, that area was swung in 2020. Specifically, the first candle area or the high to swing it was, the July into August of 2020 candles. Came back, found support on the upper first standard deviation. Still played within the wick highs on the next candle, but after tagging the upper first, went on to, of course, new all-time highs. And then what do we see here? Bitcoin has swung the bear market lower high of 2022 on a close. And we can see that, that upper first is a very viable area to be paying attention to. So, again, this is super important. I know that a lot of people might have a different opinion on it, but it's a very viable look on the monthly when it relates to volatility expansion. This is currently coming in at $36,000. Of course, there's that close open right there at $35,000 under it. I would love to see that area tested again, maybe even lower. It does not mean we're going to get it. Also, the basis band is fair game because we have not seen price take out this high yet on a close, that being at 42,240, the bear market swing lower high. And that would still technically, from the way that I've taught everyone here to read price action. It still technically make the upper first and basis available. Doesn't mean that the basis very rarely gets hit right after expansion like this, but it is, on the table. Um, and in this case, the primary area that I would be keeping an eye on is that upper first at $36,000. That's not to say that it has to do any of that. Maybe this time will be different. In this case, the upper second is right there at 44,000, 44 1 to 2. It's basically the same area. The upper second on the monthly is currently where the upper second is on the daily up here. So the daily upper second standard deviation is at 44.2. The monthly is currently at 44.1. If price starts to rise towards it again, you'll see it update to around 44.2. So it's going to be a big pivot. It's also a big pivot locally. So, if Bitcoin starts reclaiming and trading above 44, it's probably going to test mid 44 to 45, and then we come back to it, see if it can tag that monthly at 45.5. Now, I would say that Bitcoin can very easily come up to that upper third if it starts to get above that upper second. That upper third is in the lower $52,000 region. So if Bitcoin does start trading above that high at 49 to 50K, then I would be looking somewhere around the mid to low 50K region. I get a lot of questions. Landy, is 20K still available? Yeah, but you probably don't want to see it. That's down at the lower first. Would it break macro low structure? No. But what it would lead to is a much longer form consolidation. And I do mean a very long form consolidation. So, if you want to be making money to the upside and, you're looking for that big bull market kickoff, well, you probably don't want to see price trading anywhere below the basis band, which is currently coming in at that $28,000 read. So otherwise, this thing starts to compress again, and it's going to start looking like a very, very long form consolidation. But we're not there. That's not what we're looking at. We're currently looking at price expansion right now on the monthly time frame. And I will remind you, shortly after price expansion, of course, we are talking about a monthly here, we have always seen a new all-time high. But could this time be different? That's always the question, isn't it? I'm going to say probably not. History often rhymes, does not repeat, but the cyclical nature of Bitcoin when it comes to the halvings and the way in which price is becoming less volatile over time on the very long-term time frames. Yes, it's still very volatile, but less volatile over time is going to eventually lead to very long form, consolidation structures, to breakout structures, to much longer form consolidation structures with basically, longer, not necessarily bear markets and bull markets, but longer stints of price action just going sideways with a general overall markup over time. So that is going to be my basic take on Bitcoin today. Keep an eye on that 4 hours. It relates to the 12-hour is what I would say. 4 hours pivoted at 42.5. I would just keep an eye on the Bollinger Band expansion and contraction. Right now it's, just slight expansion. This is nothing yet. If it does drop the lower second and this most recent low, then, it gets more interesting, or it takes out the most recent high here and the upper second, then it gets interesting. But it's pretty easy criteria to derive. Below 42,500, it gets a little bit more interesting to see what's going to happen around this low. And above, 43,360 on the 4 hour here gets much more interesting around that 43.5 to 43.9, almost 44K area. That's what I'm going to be keeping an eye on. Of course, I will also be dropping down to the lower term timeframes myself. But the 4 hour as it relates to the 12 hour, I got this question after the stream last week. What do you mean as it relates to the 12 hour? Well, we know that the 12 hour is pivoted at all the way down here at 40, 41.7 to 41.8, which is right around the weekly. So if the 4 hour is going to go down there and test it, then that is the criteria for the lower second and upper second, or just the second standard deviations to the upside and downside of Bollinger Bands, are that they're going to act as either one of two things. It's going to either act as a reversal area, or it's going to act as continuation. And the easiest way to determine that is if price were to head into the lower second and then not break down from the lows on a close, it's probably going to turn into a reversal. But if it drops the lower second and the supports, then, then we're looking at, and the high support is really what I'd be targeting here, because that's what was tested. That's where we're looking for expansion or continuation. That would be continuation. And to the top side here, the upper second is right around the highs that coincide with these lows over here. So if we start to see this closed above, it does need to still close above the highs. If it doesn't close above the highs, it's likely to turn into a reversal. If it closes above the highs, then we're looking at price volatility expansion to the upside, right? So it's pretty straightforward, but we want to know where those pivots are for the upper second, lower second on the 12-hour, maybe even the upper first, lower first, depending on your criteria. You pick the criteria. The levels for those, for the price pivots for those, are right here on the right-hand side, gray being the upper and lower first standard deviations, and the teal being the upper second and lower second, and then the bluish purple being the upper third and lower third down there. I will have the I want to thank JR. He took some time to help integrate the multi-time frame levels into the indicator. That is going to be updated pretty soon, so you'll be able to compare time frames against each other. And right now, I don't know, I must have taken it off of here. Either way, I'll show you how that works when the indicator is updated. Of course, you can find the indicator in the link in the video description down below. It's free. No, you cannot search it in the store just yet. I haven't released it publicly, and if you have the link, you can access the indicator for free. And it will never be paid, at least not this indicator. Maybe someday there'll be something more complex where we'll have to maintain a database or something that the indicator communicates with, or have to pay developers to put in some work into stuff, and maybe that would be something, but we'll cross that bridge when we get to it. As it stands right now, I don't think you should pay for indicators. I think you should use free stuff. And this is free, and it's got a whole bunch of stuff packed in. Yes, it does. Yeah, thank you. All right, so let's go ahead and take a look at Dixie. No, I'm sorry. I'm sorry, Sam. I'm just going to get through this because I do have to go. I don't know if you heard, but I have a sick child at home. So maybe get in touch with Bobby there. He can give you his opinion on it. He's been very good with those alts, especially the degen ones. I don't know which one you were asking about, but I think it was Link. Did I hear $1,000 by the end of the year? I'm not quite sure what you guys are talking about over there. All right, so Dixie did head up to the next zone. So after the close on Friday, it broke the highs. Coming in on Friday, we saw that. Why is this reading out the 12-hour? I'm on the 12-hour. That's why. Friday, we did see it break the highs. So the next big area to look for was the 104. We saw 104 get hit today up to the 104.5. So above there, we're looking at 105. So we are looking at expansion coming off of low BBWP, nice consolidation that held the basis. So this is heading up. The next big area to be aware of on Dixie, we got that already marked, which is this high over here that coincides with these lows at 105. So the next big area, maybe a pit stop around 105.5. There is some resistance there, but not much. It's basically 105.40 to next step up. We should actually just take the low in this case. Let's go ahead and take this low here. So I'll give it a little bit more room. And then 106. So basically, next big area above here, we've had our main zone hit now, and we're seeing re-expansion. So if it does move through the 104.5, 105, and then basically 105.40 to 60, and maybe we'll do this. Go ahead and mark that high because this is going to be the next big zone. I believe this will be a bit of an inflection point. So because of the structure, I'm going to just go like that. That's going to be the bigger zone up there that I'm going to want to pay attention to, which is about 105.40 to 105.60, and then above there 106. Now, when looking at Dixie, you can see that it did get a Stoke turn. 104.22 is the number to watch. Could turn back down. Yeah. It's looking like it wants to march on through. Let's look at the 2-day real quick just to see if we can get a gauge for this. That's a strong 2-day. And it's a bullish engulfing as well. Nice bullish divergence. Yeah, this has still got room to go. Let's see where the bullish control zone is at. Yeah, 104.63. So it's basically the area just tagged. Yeah, 104.60 is the basically the bullish control zone on the 2-day. Looks really good. Again, this is the weekly. The weekly looks great, to be quite honest. This would be a breakout of this downtrend if it can close above basically 104.26, I believe. Currently trading above there. So I guess the big area to watch would actually be this wick now. So the wick high, 104.26 is going to be a downtrend break. And then we're generally looking to that upper first, which is coming in right around or just above that 105.60 area. And I do suspect that if Dixie closes without hitting that upper first this week, then that's going to be right in that 105.60 area. And if we do see Dixie close above the basis, it's going to rip to that area pretty quick, most likely. Why? Well, it's got momentum on its side, and 101.80 is going to be the momentum pivot, so looking pretty good there. All right, so we got that one set. Let's go ahead and take a look at, I imagine gold is probably heading down. Yep. And it's still within the same zone that we've been talking about for a very long time. All right, so everything is just kind of hanging out. When you see things kind of consolidating like this, just like Dixie was consolidating around the lows and starting to reverse, well, if we start seeing this consolidate without breaking these highs, where's it going to go? Most likely down. Now, it's still got room, same areas that we've talked about prior. It did hit our downside target area at the lower first, around that 2015. If it does drop this area, we're looking to the lower second around the current range lows at 2005. Below there, you could take the wick low. It's got to drop around $2,000. If it drops $2,000, we're probably looking for this zone down here around 1980 to 1965. And that is probably going to be a big one. If that one holds up, it's probably going to provide a very nice bounce right back in a range at minimum. But if it breaks down, it's probably going to be pretty nasty. And we're probably looking for a drawdown into the lower 1900 area. All right, if it does break out above its most recent high and the upper second standard deviation, where it was kind of pushing on open on Friday, but then immediately dropped down to the basis, that would be around $2,055. Then I would be generally looking around 260 to 280. Of course, above there, 2100 to 2150 at that giant rejection of a wick high. Now, this is going to start to look a little tired at close today for Stoke momentum, at least on an initial cross down. If it closes below 2,030 bucks, currently trading $5 under there. It's got the rest of the day to try and recover and or, close under it, come back to it tomorrow. Again, this is a range look on the bands. So unless we see it close above the upper second that breaks through this overhead resistance, then we can't be looking for that, 2,080 bucks. Same for the downside. Lower second, if it does start to drop that weekly and lower first, the lower second at 2,000 to 2,005 bucks. If it can't, break down below that area, then we can't be looking too much lower. So, but if it does, that's when we start looking to those downside supports. Let's go ahead and take a look at traditional markets. And we've got a pullback from the highs here on Dow. And the upper first is already been tagged. And that's now moved up to 38,323. So right around 38.3. If this area is dropped, then, we're looking somewhere around the lows here to 38.1 to the basis as being the zone that it's probably going to play in. That's coming in at 37,930 or so. Below there, we're looking back to at minimum somewhere around 37.7 to 37.8 to that lower first at 37.5. Below there, we're looking back to this deviation of the range low. Well, technically it wasn't a deviation. It was a nice sweep back to this candle here from December 20th. But lower second is coming in down there at 37,150 or so, and probably going to start moving up a little bit closer to this actual low coming into close today around 37.2 to 3. So that's kind of where I'd be looking for it to land initially. We do see an initial cross down. 38,720 is going to be the momentum pivot. We do see multiple drives of bearish divergence, kind of in play. It's pretty much shrugged all those off up to this point. So could be putting in a longer term high? Yeah, not until we see a close below the upper first here, and that's coming in at 37.8 to 9 region. Now, any closes this week below 38,560 to 570, we will see momentum turn, but there's no, there's longer term bearish divergences. There's no in-trend bearish divergence here. So there's no regular bearish divergence that's going to populate just yet, which means that this can run for much longer than people think. It could drop like a rock and get bears really, really excited, but then also come back up and take out this new all-time high very easily and make a lot of sad bobos. And the reason why I say that is because in order to get the regular bearish divergence, we would need to see higher highs on the weekly, meaning in trend. Also, this thing can drop like a rock, and it's not. I'd still be looking for higher low structure to form. Yes, there is swing structure here. There is a little bit of a closing higher low here, but I would still be looking for higher lows as it relates to this low down here in the 31 to $32,000 region. So as it relates to this last one, it would be 32,500 or so. That's what I would be looking for at worst. Now, of course, that's a brutal drawdown. Lots of folks getting wrecked on something like that. So let's see here. NASDAQ looking very similar to Dow, not quite as aggressive. A bear hammer here is not what bulls want to see. But until we see the low taken out, and I would say the close open area down here. So the open of the prior week's candle is what I would be paying attention to. And on the daily here, this could be putting in a high, but it just put in a higher low. Tag that upper first. It's not bearish right now. It could turn bearish, but it's not bearish right now. So the criteria for that would be if we do see the upper first dropped and we see the open right here at 17,415 taken out, then we got to pay attention to the basis and this higher low over here. So the basis is currently coming in at 17,180. We can call it 17,2 for even numbers, to around 17,128 or 17,130 at this higher low. If that area is dropped, then we're looking for it to head down into, the 17,000 to 16,800 region, possibly even a dip back to the 16,700 region over here. So that's kind of simplistic, but it works. Also, all it's got to do is take out this high right here at 17,665, and then we're looking to around the 17,800 to 850 area, at least initially, and then come back to it. It has legs from the Bollinger Band perspective for 18 to 18.2 up there at the upper third. If we did start seeing this area dropped at the lower first, around the 16.8 region, then we do have to keep an eye on this lower second at 16.5. Those are going to be the key pivots to watch this week. And we've got momentum pivot at 17,587. It's currently trading about 10 points above there. So nothing too crazy. Weekly, again, there's no chance. There's no weekly high put in until at minimum we see a swing below for the swing high to close below. You could say basically 17.4 to 17.5. Below there, then we still have to keep an eye on that upper first at 17.1 to the prior all-time high area, which was, again, it was a major high. So, and that's at 16,764, 16.8 region. If we did start to see that area dropped, then on NASDAQ, you can see there is a higher low structure. So we would have to pay attention to this 16,250, right around where that basis band on the weekly is coming in. Again, same kind of thing. There's no in-trend bearish divergence oh no, you know what? This would have in-trend bearish divergence. So this would not be able to avoid in-trend bearish divergence if it puts in a high here. So that's, that would be pretty nasty and pretty bearish for the bulls there if they were to see this confirm right here without at least getting that RSI a little bit stronger up there. But still, I'd be looking for generally all the same stuff. Any kind of bearish div that were to pop, got to see a swing high put in, then a closing high, has to drop the upper first and the previous all-time high. So basically below 16,764. That's where we would see most things confirm, probably see price come back down and test lower 16s, upper 15s over time. It's not the first thing I'm looking for, though. That's really not, just to be straight up with you. Does it look a little toppy up here on the daily? Sure. But if it's so close to the high that if it takes it out, it's just going to march up to around the 17.8, 17.7, 17.8 region. Just keep an eye on around that 17,100, 17,200, 200 to the downside for the daily. The SPY chart looking a little bit more rejective in terms of its stance on that upper second, but the candle structure is not quite as consolidation high looking as the others at the moment. In this case, the upper first is here at 490. We had that nice spike up to 496. We were looking for that area at the upper second. That's still going to be the same target just above there at 496.60. So basically 495 to 500 is kind of the point range that I would be looking for if it can trade back above 495. and then just take it, as I've said, 5 points at a time. 500 to 505, 505 to 510, and that's kind of the criteria. It's pretty easy. If SPY does drop 489 to 490, then I'd be looking for it to run back, at minimum to 488, but, the basis would be in play there at around the low 480 region, 480 to 482 by this higher low structure. If that area is dropped, we're looking back to 480 down here to 475, 476 by the lower first. So it is lining up nicely with support and resistance as it stands right now. And then we come back to it. 470 is going to be the main pivot. I do think the lower second, which is on the bottom side of the bands here, I do believe that is going to update at the end of today into that 470 region. So that would be kind of my longer term time frame breakdown region that I would be looking at. 495 is going to be the pivot for today. Currently trading in that 493. Let's look at the weekly real quick here. No top just yet. If it did drop the upper first, which is at 481, again, we got to just keep an eye. It can swing down below, but if it closes below, it starts working its way through these support areas down here. We are going to remake this chart a bit too. When we do see a high put in, but basically be looking somewhere on the basis. Again, that's 460 zone, that big 453 to 460 area. So coming in at 457 currently. Look, Stoke can stay up here. It can get a bullish reset within the same zone and in the overbought zone. It can stay up here for an extended period of time. It's been up here for a while. When it does drop, doesn't necessarily have to drop all the way to the oversold. And the way that we see expansion occurring here, I would say that even if it did, I don't see it taking out like 410 unless there's something like way crazier going on. Like unless you see like a collapse of larger banks that take out. There's a lot of regional banks that are collapsing, right? But if we see some of that bleed into like larger banks and they start, going for the domino effect, that's when you would see things really start to, look absolutely atrocious. That is going to do it for today. Again, I do have to get going. My boy is not feeling too well, and I want to make sure that mom's got some help for him. So I am going to be logging off here in just a minute. Yeah. I do have like a couple minutes here. So maybe I can get Link in, because I did tell Sam that I would try to do it last week. So Sam, wake up, Sam. All right, let's go ahead and do Link. Link looks all right. Looks like a little bit of a break out of this consolidation structure. We have been keeping an eye on this. We already had a zone of interest, if you remember correctly, and it has tagged that zone of interest. So, I had mentioned the last time green means go, $18, and then we're looking up to the $19 to $20 region, and the high came in at $19.75. So that is just a short-term high. If we were to look at Stoke, it's got some legs, 1450, 1446, 1746. Okay. You can tell that I was up for a little while last night, taking care of my child, because I can't talk or read numbers, apparently. The pivot is 1746 on momentum right now. Now, if it is closing above the upper first now, which is a little bit lower than that momentum pivot at 1720, it's probably going to update a little bit more aggressively today. But below there, we're probably looking at heading right back into range around the $15 to $16 region. But if it can stay above 17 to 1720, Probably looking at it running this 19 to 20 bucks again. If it can break out of 19 to 20 bucks, just go out to some of the longer term time frames. Then I would be looking for, in general, about 21.50. If I can get above 21.50, we're looking at 22.60 to around 24 to 25 bucks. So I'm not going to mark up the chart. I just want to let you know that if it is going to break out of there, probably looking at overall low 20s to mid 20s. So above there, we're looking at this last high. It's got another high to get through. So it's got to get through 24 to 25 bucks. And then it can go test around 27.50 to this last spike high around 29 to 30 bucks. So that last spike high is coming in at 29.50. Okay, so basically it breaks out above where it is now. Take it, low, mid to low $20 region, break that. We're looking, mid to upper $20 region, pushing 30. I would say that it's still got that available. This is a beautiful break. This is a beautiful consolidation to breakout, but it has to complete the breakout and not fail. Now, when I say it can't fail it on the weekly. So you don't want to see a weekly top put in around here that comes right back into range. As for the daily can keep testing it. It can higher low its way. It can consolidate. It can do whatever the hell it wants. You don't want to see a weekly high that comes right back into range, because then you're just going to be waiting that much longer for another decent trade like this from the lows. It's probably going to range around more and then cool down. This is also going to be, expansion on the weekly if it can remain above the upper first. So if it does, we had this nice big move up, had this nice consolidation. You want to see this get this nice big move up. So you want to see upper second standard deviation areas closed above. That's currently coming in at 21. So 20 to 22 bucks, kind of the area that you need to watch if it gets there. Above 22, it's going to get expansion on the weekly. So definitely watch it coming into Sunday's close. Of course, we can always talk about it later on in the week during Wednesday's live stream or Friday's live stream as well. But to the downside, you don't want to see basically the breakout loss to the upper first. So upper first is right there at 1691. So a little bit more generous than the daily, to around 1636. You don't want to see that lost on a weekly close. Okay. Again, I'm being very specific on a weekly close. You don't want to see that area lost. So you want this to maintain the breakout, the integrity of the breakout on the weekly. 1696, so basically 17 bucks is also the weekly pivot. And if it were to put in any kind of a high this week, it would be a higher high on price with a lower high on momentum. And, well, we know what that is. That's a bearish divergence. And we would also see the same on a RSI indicator, so regular bear div. So you want to see this move. It's got to shit or get off the pot this coming week or two, okay? All right. That's going to do it for me today, guys. So for real this time, you have a wonderful morning, afternoon, and evening. No matter where you are in the world, please trade safe. And, of course, as always, stay safe. And I will catch up with you guys on Staring at Charts video tomorrow. And, of course, the Wednesday live stream. So you have a good one. And with all of that being said, I will leave the stream up for a few more minutes for those of you that want to chart while there's some tunes going. I will leave it up for a couple minutes here. Go ahead and get that set, and then I'll say the thing. We're just going to set it for 11:30 here. All right. All right, yep. You guys have a great one. Thanks for hanging out with me today, and I will talk to you Wednesday. 90 out.